Food company Tiger Brands' first half headline earnings per share rose by 5.2% to 787 cents. This despite a challenging domestic trading environment and where group turnover for the half year increased by 12.1% to 11.6 billion rand. To take a closer look at the numbers, I spoke to company CEO Peter Matlare earlier. Let's take a look.
We've not always necessarily passed on the full cost increase that we've had to absorb from our suppliers. So cost avoidance is one of the areas we work very, very hard at. We look at more efficient ways in which to do things. And then when we look at passing on those costs, we've been very judicious in trying to do so. But, you know, if you don't recover your costs, ultimately you suffer quite badly. And you can not only at a margin level and at a profitability level ultimately, but effectively your business becomes not sustainable in the longer term. So it's just one of those important areas. Having said that, we are looking at our entire architecture at the moment, looking for efficiency. So we've started a very clear program about bringing together our finance and admin into a shared service or joint shared services process. And what would that enable us to do is any savings we're able to get from bringing those elements together, we'd want to reinvest in our go-to-market portion of our business. So that's the one part. We look at other areas for sourcing products. So to the extent that we've got particular types of product that we would source from China or India, etc., we look very carefully at those and see, are there alternatives or are those the places we ought to go to in order to source some of that product? So it's very intense and very necessary process that we undergo in order to see how we become more efficient and more effective. In our go-to-market side, you look at your logistics supply chain and make sure that it is the most effective and the most efficient.
When you're talking about taking costs out the system, do you have a number on the table in terms of how much more you'd like to take out of the Tiger Brands model?
We're working through that at the moment, and I suspect that when we talk to you perhaps later this year or maybe next year when we finalized all of those, we'll give you something approximating a percentage or a number. I always find it difficult when people want to kind of pin you down to a specific number simply because a lot of this is about moving parts. And of course, it's always having to deliver that which we promise.
But as you say, very much the focus right now, and also the fact that you've got increased competition and you have indicated that it has started to affect parts of the business. So what does innovation for Tiger Brands mean right now in light of those factors?
So, and innovation runs through a number of areas. A product innovation, so what kind of products can we bring to market? We just launched, again in our bread category, the Ultima Healthy Loaf, which is one of the most successful innovations that we've launched into that market. We would look at other areas, whether it's through flavors, different offerings in our carbohydrate environment, etc. So we look at all of those continuously, and we think we've got some exciting things that we've brought to the market in the past and new things that we'll bring to the market over the next 3 to 6 months. We have a nice innovation funnel in that regard. Innovation also includes pack sizes, so you must have the relevant pack sizes for the particular markets in which you want to sell some of these products. So rather than having, let's call it 8 in a pack, it might make more sense to have 4 in a pack because the consumer within the sphere of what they require are more happy to deal with a smaller pack size.
Talk to us about Africa right now, because of course that is an area where we're seeing tremendous growth. On the export side of the business, you saw 78.7% growth in exports during the period. Your acquisitions are starting to pay off in Africa. So tell us firstly, I suppose, about the export side of the business. Can you continue to grow exports at this pace?
So I always say that this is a long journey. It really isn't a short run or a 100-meter dash, I should say. It's very focused on building sustainable assets in those markets, and therefore the export part is but one part of doing so, getting our brands in market. I have no doubt that at the appropriate times we'll be putting hard assets in those markets where we've reached critical mass rather than exporting into those markets. The benefits in the longer term are quite obvious, and indeed when we speak to our business partners or indeed to governments in the balance of the region, they're always encouraging us to put down hard assets, put down greenfield opportunities. So I see that certainly evolving over the next period of time. That's on the export side, but then putting down those greenfield opportunities. And of course, then there's the acquisition side, which we continue to plough.
Firstly, on this part of your business in Nigeria where you do already have a JV, you've got UAC Foods there. They've increased capacity by 33% and they think they've still got more room. There's still growth in Nigeria with regards to their business. You're testing your products in Nigeria. When do you expect to start being able to sell Tiger Brands products there?
Okay, so what we've always said is get the right platform in place first. So getting the local products absolutely humming in that market is absolutely critical. When we begin to overlay our products, and we've done so more in East Africa rather than West Africa because we've been in East Africa in a bigger way for the last 3 years, we'd be comfortable with the route to market, understanding taste profiles, and a whole host of other elements within that. So I would say that for Nigeria, having achieved all of the registrations that take quite some time, we'd begin in the next 6 to 12 months filtering in some of our relevant products into that market. But please make no mistake, in Nigeria there's some great products, some great brands that either we own or others own, and it's a very competitive marketplace.
Yeah, another space where there are some well-established brands, and one of them is Dangote flour. Why is this an attractive acquisition for Tiger Brands?
So, first, I suppose one would break. We've not done the deal yet, so we're still in discussions, and we quite clearly think strategically it's the right thing for Tiger Y. It's in milling. It allows us to do that which we are very good at. We've demonstrated that in South Africa. It also allows us to move downstream. I know we run a very good integrated mill-bake operation in South Africa. We do believe that in time, putting down bakeries in Nigeria is a really great opportunity, so we'd want to integrate that. They're in pasta. You obviously know we have the Fatis and Mona's brand in South Africa. So there's some clear areas in which we've demonstrated some great competence that we believe we'll be able to do with our partners in Nigeria. Aliko himself is a great guy to do business with. He's one of the most determined people I've come across. And I think partnering with someone like that, if we can get that right, is one of the better things we would have done in a long time.
In terms of the structure of the deal, if it does go through, what percentage would you be looking to take ownership of, and what would that cost?
When we've concluded the deal, I promise you'll be one of the first people that I'm going to talk to about that.
Do you think that you'll win shareholder support?
Look, the deal strategically makes sense, and therefore, to the extent that we can conclude the deal in the terms that we would like to conclude the deal, I suspect that shareholders who to date have been happy with our strategy would give it support.